Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has managed to hold the bullish mood for 3 consecutive days as it now challenges the 60-day moving average. And from that level around 67.95 to 68 cents is a key point, because if we see a sharp break through there, it could trigger a rally onto 70 cents and little pullbacks be likely to be seen in the process. Still, we've got to see the break and also from a New York close above this level of 68 cents to support the call. Otherwise, a rejection could see the market tumble back towards 67.35 and reassess. Viewing the dollar index, which measures the greenback strength against a basket of 6 major currencies, has slipped further and is holding around 100.80 and therefore has put a little bit more upstep as the euro rallies for 4 consecutive days and now tackles a key level of 110.75. We've got to 110.74 at the moment and slightly backing away, but nevertheless the technicals are still slightly firm with the ADX trending to a bull case, and a break above here of 110.75 could see a move up to 111.80 and reassess. If we see a rejection from 110.75, which still I'm not going to rule out, therefore could see a pullback to 109.75 before any return demand or strength to take the challenge back higher. The dollar yen not as bearish, but still breaking down and slightly away from the call at 134.80.90. It got close there to this level this week, but the backing away as the dollar weakens. The market is now looking towards a support level around 131.80 and may find demand there and then retest the top side and maybe claiming that top side level of 134.80.90 and therefore could progress higher. But it all depends if the dollar sinks further, that is. If it closes under 100.80, then most probably will drag the dollar yen lower. Sterling, the market is still holding to 10-month highs and still looking towards the challenge of 125.65. We didn't get quite close there, but the market is still a little bit of profit taking coming through. I'll be a little bit on the cautious side because the MACD is a little bit weaker, so we may see a rejection from 125.65 and look towards 123.90 before any retest to the top side. Now I've got a picture of the weeklies here, and as you can see, the market is since closing above 2040 area, the market is still holding relatively firm, and that is could see a rise on towards 2064 to 72. But the real trigger was the point around 2034 that ignited the move and therefore has kept the market pretty much steady, even though there was some divergence here, which has now been somewhat negated, and the ADX has strengthened further. So I feel the market will continue on to the top side and maybe even see that challenge that was rejected back in February 2022. Wrapping up with oil, well, as you can see, there is clear divergence in the pattern here after the market took the challenge to that key level of $82.90 to $83.25 and backing away sharply, now put a slight weaker step into today's price action as the ADX is overheating. And therefore, I do expect to see a pullback to around $80.50 and then maybe another test up. But nevertheless, the bearish divergence is strengthening, and I still feel that we could get this gap, or breakaway gap, should I call it, to be filled, and that is around that 75 area. But let's take one step at a time and see if the pullback first of all gets to 80.5. Well, that wraps it for the week. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.